My name is Andrew Stotts from the Valuation Master Class, and today we're going to have a great presentation by one of our graduating students. And I am going to, and the company that she's going to be covering is Walmart. So let's get into it. I'm going to bring her into the screen right now. So, Sanvita, how are you?
I'm good, sir. How are you?
I'm good. Are you ready? We're live now. You ready to go?
Yes.
Have you been doing a lot of preparation to get ready for this?
Yeah, it's been a hectic week.
What city are you in for the audience out there?
Oh, I'm currently in Delhi, India.
Okay,
Yeah,
in Delhi. All right, good. Well, why don't we do this? I'm going to bring up your screen here, and
sure.
and then I'm going to put you down. There we are. So now we are down at the bottom, and basically I'm gonna leave the screen. So in a second, and when I do, you just start. Okay. And for the audience out there, tell me what you think about her work on Walmart. This is a culmination of 12 weeks and as much as 500 hours of work to learn valuation. So let's see how you do. All right, it is time. I'm going to leave and then you can start right now.
Good morning, everyone. I'm Samrita, and today I'm going to talk about Walmart. So, I initiate coverage on Walmart with a sell recommendation based on a target price of 59 US dollars, implying a downside of 27%. I derived my target price from a DCF based valuation using a WACC of 8.2% and a terminal growth rate of 3%. The highlights when it comes to Walmart are low domestic growth prospects due to market saturation in the US, e commerce expansion and tech innovation, which might drive future growth, efficient cost control contributes to strong profitability. Coming to the risk, there is intense e commerce competition as well as physical store competition. There is a lot of sustainability pressure on the company, and there is an increased capital expenditure from Walmart's side. Here we can look at the valuation table. Moving on to the background of Walmart. Walmart was founded in 1962 as a discount store in the US. It expanded rapidly and was publicly listed in 1970, helping fuel its growth into the world's largest retailer. It operates a variety of store formats, including discount stores, hypermarkets, and grocery stores. Walmart serves over 240 million customers weekly across 19 countries. It remains a dominant force in the US retail, commanding a 10% market share. Beyond physical stores, Walmart has expanded its e commerce capabilities with its Walmart Plus membership program and online grocery delivery services. The company also generates revenue through subsidiaries like Sam's Club and operates internationally under brands like Flipkart in India. Coming to the three key stories, there is low domestic growth prospects due to market saturation in the US. Walmart, the largest retailer in the US, controls around 25 to 26% of the grocery market and holds significant shares in various other segments like general merchandise and household essentials. However, the US retail market has matured and Walmart's domestic growth prospects are slowing. As of 2022, overall US retail sales grew at 1.5 to 2% annually, impacted by factors like market saturation and a highly competitive landscape, especially from e commerce players like Amazon. Despite ongoing innovations, Walmart's large US footprint and heavy market penetration leave limited room for substantial domestic growth. The company has shifted its focus towards diversifying its revenue streams, including digital transformation and exploring non retail businesses like healthcare and financial services. The next story is e commerce expansion drives future growth. With US market saturation, Walmart increasingly prioritizes its international expansion and e commerce growth. Walmart's US e commerce sales grew 12% in 2023, driven by its online grocery and delivery services and its Walmart Plus membership program. However, international markets offer high growth potential such as its investment in Flipkart India and growing markets in Mexico and China. These markets are projected to grow in the mid to high single digits, especially with increasing internet penetration and consumer adoption of online shopping. Walmart's international e-commerce revenue has seen double-digit growth rates in recent years, contributing significantly to the company's global revenue expansion strategy. The final story is about the efficient cost control contributing to Walmart's strong profitability. Walmart remains and maintains strong profitability compared to many of its global peers, driven by its massive economies of scale and strict cost control measures it has built over the years. As of 2023, Walmart's net profit margin stood at around 2 to 3%, which is relatively low compared to technology focused retail rivals like Amazon, but robust given the low margin nature of the grocery retail. Walmart's gross profit margins remain stable due to its ability to negotiate favorable supplier terms and optimize supply chain efficiencies. Additionally, Walmart's low distribution and marketing costs support its profitability. Walmart spends only about 2.5% of its total revenue on advertising, benefiting from its brand recognition and vast store network, further bolstering its return on equity, which remains competitive with peers in the retail industry. Moving forward, let us look at the quarterly results of Walmart. In the second quarter of 2025, Walmart experienced a slight revenue increase by 4.8% year on year. The company saw a 6.9% increase in gross margin and a higher increase in EBIT margin of 8.5%. Walmart reported a recurring EPS of 0.56 US dollars, which was minus 17 percentage year on year and minus 19 percentage quarter on quarter. The result was 48.8 percentage of our full year forecast. Walmart's most recent quarterly results, released on August 15, 2024, showed strong performance. Walmart reported a revenue of 169.3 billion, a 4.7% increase compared to the same period last year. This was slightly above analyst forecast of 168.56 billion. The company also experienced significant growth in e-commerce and continues to focus on improving customer experience and operational efficiency. Coming to the constraints of growth, we have categorized this into major, neutral, and minor. And overall, the Walmart's growth are neutral. Coming to each of the segment, the capital is neutral because Walmart's capital structure is relatively strong, but its increasing capital expenditures pose a moderate challenge. Significant investments in e-commerce infrastructure, digital transformation, and store modernization require continuous capital outlays. While its balance sheet remains healthy, growing capex could exert pressure over time, although not yet a major constraint. Here we can also see a graph of how I have forecasted an increasing capex. The operations pose a neutral risk because Walmart's global operations are vast, and while its supply chain is efficient, the operational complexity of integrating physical stores with e commerce is growing. The company must continuously upgrade its logistics and fulfillment capabilities to meet increasing consumer demand for online shopping and faster delivery times. The ongoing transition towards automated process and digital innovation requires heavy investment in technology. Any disruptions or delays in these operational improvements could slow down growth, but Walmart's scale and resources make this a neutral constraint. Coming to market, the market is a major constraint since Walmart faces significant competitive pressure in the e-commerce space, particularly from a giant like Amazon, which dominates online retail. In addition, emerging digital-first competitors like Shopify as well as specialized retailers add to the competition. The shift in consumer behavior towards online shopping creates challenges for Walmart, as it must compete on both price and convenience. Its heavy investment in e commerce is crucial, but Walmart still lags behind in market share compared to its primary e commerce rivals, making this a major constraint to growth. As we can see in the graph below, Walmart only has 7% of the market share, whereas Amazon is leading with a 20% market share. People is a minor issue for Walmart because Walmart has been increasing wages and investing in employee development programs to attract and retain talent in a tight labor market. While this increases operational costs, Walmart's workforce initiatives have helped it maintain a stable labor base. The company has made strides in developing a technology savvy workforce, but these human capital concerns do not yet present a significant barrier to growth. Coming to the revenue structure of Walmart, we can see that the revenue is rising in the graph on the right side. Walmart is a technology powered omnichannel retailer that engages in global operations of retail, wholesale, and other units, as well as e commerce, located through US, Africa, Canada, Central America, Chile, China, India, and Mexico. Their overall revenue include three reportable segments: Walmart US, Walmart International, and Sam's Club, with Walmart US contributing the highest at 69%, followed by international markets at 18%, and Sam's Club contributing to 13%. The e-commerce segment includes various initiatives like the Walmart.com, SamsClub.com in the US, and the acquisition of Flipkart and PhonePe to expand e-commerce operations in the international markets like India. They have almost 2.1 million associates as of 2024 January. Walmart's merchandise is divided in three categories. Grocery has the basic needs like snacks, dairy, beverages, etc., making up the highest contributor to sales at 60%, followed by general merchandise at 26%, which is divided into entertainment, hardlines, fashion, and home. And finally, the health and wellness segment includes pharmacy, OTC drugs, and other medical products, contributing to the least at 13%. Coming to the FAMR framework analysis, overall, Walmart appears to be the best relative to 1,800 non financial companies in the US, considering fundamentals, valuation, momentum, and risk. Fundamentals: Walmart is ranked at the top in the US due to the highest revenue compared to industry average and an increasing asset turnover. Valuation is average as it trades at a moderately expensive multiple relative to the benchmark. Momentum is ranked neutral as both price and fundamental momentum have been delivering convincing results but can be improved. The balance sheet risk is ranked above average as the current ratio is low and the net debt to equity ratio is high, but the price risk measurement in terms of beta to the US market is low. The conclusion about the competitive position of Walmart is 57 out of the 100 percentage. This is because of the five major components. The rivalry among competitors scoring a 67 percentage, as Walmart is significantly larger than most of its competitors. While there are other large retailers, Walmart is one of the largest retailers globally in terms of revenue and store footprint. And but the retail industry has been growing slowly in mature markets like the US, but its expansion into e-commerce will be helping it. And there is significant technological disruption occurring in the retail industry, mainly with the growth in e-commerce. The second part, the bargaining power versus suppliers. Walmart has a high score of 80 percentage. That is because the suppliers have limited control over Walmart because of its immense buying power, and it's not difficult for Walmart to switch suppliers. And Walmart typically focuses on distribution and retail rather than manufacturing. Coming to the bargaining power versus suppliers, the Walmart scores a little low at 40 percentage. That is because Walmart's customers have many alternatives and the switching cost is really low. The threat of new entrants is moderately high at 60 percentage, where entering the retail industry is relatively easy in theory, since barriers to entry and are low. But any company can access the necessary raw materials. But the advantage that Walmart has is that it would be extremely difficult for new entrants to achieve economies of scale similar to Walmart. The threat of substitutes is low at 40% since customer switching costs are very low for Walmart. And for most of Walmart's product categories, there is little perceived difference compared to competitors. While traditional retailers face competition from e commerce giants like Amazon, Walmart has responded with its own online platforms and services such as Walmart Plus. Coming to the leadership and ownership of Walmart, here we can see the chairman of Walmart, Mr. Gregory, and the president and CEO of Walmart, Mr. Dow McMillan. The board composition is almost equal to the US laws, with one director higher than what the US says. Here we have the external institutional ownership on the company, which is at 35.15 percentage. This has been growing over the years, as we can see on the chart on below right side. Coming to the WCB analysis, Profitable growth ranked average among 520 large consumer staple companies globally until 2024. Profitability has remained consistent for the whole period with no major change. The growth ranking fell drastically in 2022 from a 3 to a 10 and is now gradually rising, but had another drop recently. Asset efficiency has been a big positive for Walmart and has only shown improvement in the recent years. It has shown world class performance consistently and supported the main driver of the overall profitable growth rank. Expense control has ranked below average since 2021 as and has deteriorated since. Sales growth and expense direction have both fallen drastically in 2022, but the sales growth has recovered, which is not the case with expenses. Thereby, the major weakness here are expense direction and control, and the main strength is asset efficiency. These are just few more slides indicating how we came to the above consensus. Coming to the ESG analysis of Walmart, the overall ESG score is at 73 percentage, which is above average score for such a big company. In the environmental aspect, the company has a resource reduction policy and it has faced a few environmental controversies in the past, but nothing very recently. The company does have emissions and waste policy. The company is engaged in emissions trading and other ways of trying to reduce its climate footprint. And the company does have environmental, eco, green, or organic products, making its overall score a 60 percentage. Coming to the social part of ESG, the company has health and safety policy, it has human rights policy, it has fair competition policy, it has also implemented quality management systems, and the score has reduced because it derives revenue from weapons, alcohol, gambling, tobacco, which makes its final score at 60 percentage. Coming to the final part of ESG, the governance, the company has a board of independents in line with the country average. The chairman is not also the CEO, and the company has a shareholder rights policy. The company does not have any insider dealings or accounting controversies in the recent years, and the company has CSR sustainability and ESG reporting standards, which is why its governance is rated at a really high rate at 100 percentage. This is the P&L statement of Walmart, and we can look at the revenue growing with the years as it expands its operations. The cash and short-term investments are expected to grow in 2025 as Flipkart is predicted to go for an IPO in this particular year. Here we can look at the long-term debt going down as the company is self-sufficient with its cash and its new ongoing investments. We can look at the capital expenditure growing here. Are a few ratios, and the free cash flow data. The EBIT is growing continuously, showing an increasing operational efficiency from the company's side. Coming to the relative valuation, on the forward 2025 expected PB multiple, Walmart looks expensive compared to the consumer staples sector in the US. The disparity between Walmart Asia and the global market further highlights the same. I forecast its return on equity to be around 24% in 2025, higher than the sector average in Asia and global average, but still lower than the US sector average. This results in Walmart trading at a premium based on the 2025 PB to ROE multiple. Coming to the relative valuation with respect to the PE ratios, Walmart trades at a significant premium to the consumer staples sector in the US, Asia, and the world. Thus, Walmart looks expensive on a PE basis as well. I expect Walmart's EPS growth to be positive in 2025 due to several factors supporting its profitability. First, ongoing investments in e-commerce and automation are expected to drive sales growth and operational efficiency, enhancing overall margins. Second, despite inflationary pressures, Walmart's ability to leverage its scale allows it to negotiate better supplier terms and pass on costs effectively to consumers. Sustaining profit margins. Third, the company is expanding its high margin services such as healthcare and financial services, which are projected to contribute positively to net income. Additionally, Walmart's share buyback program will reduce the number of outstanding shares, further boosting EPS. Moving on to the valuation and target price, I assume a risk-free rate of 3.5% and a market equity risk premium for the US market of 7.5%. Walmart has been a low beta stock, so I assume a beta of 0.75x, which is slightly higher than its previous averages, giving a cost of equity of 9.1%. I forecast a capital structure with around 18.5% debt to total capital. This results in a WACC and a discount rate of 8.2%. I use terminal growth of 3% and free cash flow to firm to value the company. In my base case scenario, I anticipate sales growth of 6.5% until 2029, leading to a value of USD $59 per share based on the FCFF methodology. This represents a 27% downside compared to the current market price. In my sensitivity analysis on the following page, the optimistic case assumes a gross margin of 28% until 2029, resulting in a target price of $71.5. Conversely, in the pessimistic case, sales growth is assumed to be 24%, yielding a value of $47 per share. This is a sensitivity analysis. The main risk for Walmart is the short term is heavy investments. Let us discuss how we came to that. Intense e-commerce competition. The aggressive expansion of Amazon in the e-commerce space poses a significant risk to Walmart's market share. As Amazon continues to innovate and improve its delivery services, Walmart may struggle to attract and retain online customers, impacting overall sales growth, which is why it remains at 6.5% throughout the years. Physical store competition. Competitors, competitors like Costco are intensifying competition in the physical retail space by offering bulk pricing and membership models. Sustainability pressures. Growing pressure from consumers and regulators for sustainable operations compel Walmart to invest heavily in renewable energy and waste reduction initiatives. It already has over $1.1 billion allocated from its green bond proceeds as of 2022. Key areas of investment include 378 million in renewable energy projects such as solar and wind, 338 million in high performance buildings, and 307 million towards zero waste and circular economy initiatives. Additionally, Walmart has committed to achieving zero emissions by 2040 and powering 100% of its facilities with renewable energy by 2035. Walmart also plans to further expand these efforts, particularly through its Project Gigaton initiative, throughout its supply chain by 2030. Increased capital expenditure. Walmart's heavy investments in e-commerce, technology, and supply chain improvements result in high capex. This financial burden may make the company more vulnerable to economic downturns. If customer demand or market conditions shift, Walmart could face challenges in justifying these expenditures, potentially straining profitability and limiting flexibility for future initiatives. That is my presentation on Walmart. Thank you.
Excellent. Excellent. Hold on one second. All right. So, how does it feel to graduate from the Valuation Master Class?
It feels like I've achieved something this year.
It's a big achievement. How many hours do you think you spent from beginning to end in the whole Valuation Master Class?
It has been a lot of hours.
How many do you think?
Maybe 400?
400 hours. Incredible. Incredible. And what would you describe as the transformation that you went through in the Valuation Master Class?
It's like you said, it's about giving priority to different things at the same time and getting to the result that you want to.
Mhm.
That is the
And
main
um,
drive.
and tell me about what your future plans are.
Yeah, now that I have got an understanding of valuation, how to research on a company, and based on what factors I have to look for my assumptions about a particular company, I think I'll go more deeper in the future in the same field.
Fantastic. All right. Well, I'm going to take you out now, and great job. And I'll see you in the Slack channel.
Sure, sure.
Yep.
Thank you.
Well, how about that? That was a lot of detail on Walmart and her valuation. We didn't have time to get to all the questions, but hopefully in the next one we will. So I want to say for those people who are looking at that and saying, I want to learn valuation, well, join us in the Valuation Master